What's going on? So let's get right into it then. So let's kick off with the weekly market brief. So oil opened up at $75 a barrel for the open. We've dropped down again to the big support area of $70 to $71 a barrel. So we've had four touches, one, two, three, four, and price has retained now. It's jumped back up again. So price is looking up again. Our the technicals we're looking at, if this had broken, we'd have dropped down below 70. However, price has supported this area now for the fourth time. The first touch was actually in March, so price is heading up. So $77 needs to be breached. Once that's been breached, we are looking to head back up. Obviously, the geopolitical reason is that Saudis have cut oil production about 1 million barrels per day, and they've kicked the can down the road where oil barrel production cuts will not last till the end of the year. They've been pushed over to end of 2024. So that's what oil is. So the diesel market will be going up by 1 pence. Moving over to sterling, this is the daily time frame. As you can see, yesterday's candle, it was a big push up. We've sort of been very bullish all week. We kicked off the open at 12500. It's a big psychological area, and we are currently trading just below 12800. We tapped that earlier on a London Open. So the good thing is sterling's back on the rise again, and the Bank of England are looking to continue raising rates. So we will see sterling continue pushing up. However, there was a Fed meeting this week, and so they've been tightening on every single policy meeting 10 times in a row. So the first time they've actually stopped, there was a pause. However, it was a hawkish pause, which means that they are continuing to look to raising rates, meaning they might have stopped, but rates will continue to rise because core inflation, is still about 4% in the US. So therefore, Jerome Powell did mention, who's the Fed chair, that they may have paused today, but that does not mean the job's over. They will continue to raise rates, and they want to completely tackle inflation to bring it down below 2% target. So we will see the dollar strengthen in the next few months or so. The markets were expecting this interest rate pause, to be bullish, meaning stocks and currencies and crypto will be climbing. However, that was not the case at all. So what happened was something called bad rumor sell the fact took place. So on the initial rate rise, what happened was this is what it was, where price market had priced in where they were gonna continue going up, but however on the release, dollar strengthened. So once this sort of move finishes, we will see sterling drop down again. However, the next week we're looking at two big data points is going to be inflation for the UK, and secondly is going to be the Bank of England policy meeting where they are looking to raise rates by 25 basis points. So that's all then. Let's see what happens next week. Join me again then.